Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. As usual, we will talk about the euro currency. Well, we'll start from the daily time frame, and I have to say that the situation on the euro currency becomes more interesting. Well, yesterday we specified that the 786 Fibonacci resistance from this high to this low is very significant in terms of the potential butterfly sail pattern that could form on the daily time frame. I do not have the shape of this butterfly on this chart, but we talked about yesterday, so just review the previous video research to refresh these memories about this butterfly. In general, this is the left potential wing. Okay, then we expect some retracement down to that area or maybe even to that area, and then acceleration to the upside. Well, after that, this butterfly will be accomplished. The target of this butterfly stands around 154, so right at the weekly level of overbought and near the monthly ABCD target that we have discussed in the monthly research. So that's a bit long-term perspective and our medium-term expectation. What we're gonna do and what we should to watch for during today's trading session and in general at the end of the week. So what we see currently. Since this area, as we said, very significant for us, 147.20, sorry. Well, we can see that right below this area, market has formed bearish engulfing pattern. It's not very perfect because this white candle is a bit outstand black candle, but they are very similar in length. Okay, so that is bearish pattern right below the 786 resistance. Market now is not at overbought, so potentially there is now barriers except that area that could stop the market from the further acceleration to the upside. And you can see that market has formed this bearish engulfing even before it has touched this area. Okay, so that is the first bearish sign on the daily time frame that is seen right here. What we could expect here, as we said yesterday, this is nice thrust to the upside, although it hasn't quite sufficient number of bars. Just let's count 1, 2, 3, 4, 5, 6, 7. Well, minimum it should be 8 bars. But if we take a look at the nature of this bars and how it open on the low, close at the high, open on the low, close on the high, and etc, etc. So in general, this is nice thrust, nice separation from this green line that is 3x3 moving average. Okay, so in general, I think that this thrust could be the context for a potential directional pattern. It could be bread and butter if market will show some retracement to the downside, for instance till 144.15. This is the first 3/8 support, and monthly pivot point 144.22 stands also in that area. Okay, or it could be the double repo when the market will show some close below the 3x3 with the shallow retracement, then close above it again. I prefer that it makes new highs and then close below again. That will be our confirmation bar. In that case, we could expect deeper retracement, probably even to 618 support, because bread and butter is a continuation pattern, while double repo is the short-term reversal pattern. Okay, so that's in general our expectation about the daily time frame. Now let's shift further to the lower time frames. Sorry, that's the 4-hour chart. We can see that 4-hour trend turns bearish. Yesterday we have discussed this divergence and this potential the 3-drive sale pattern, but you can see that the third drive hasn't accomplished, and now it looks like the potential head and shoulders pattern. In general, we will discuss this pattern on the lower time frames with more details, but currently I just want to show you this confluence support that's created on 4-hour chart around 3/8 daily support. This is also the 618 support from this recent swing up. Also the monthly pivot point stands in this area. So in general, 144.15, 144.62 is a rather strong area of support. So if market will move to the downside, probably it could reach it. Okay, but major importance that the 4-hour trend currently is bearish. So it tells us that probably market could continue some move to the downside. Now on the hourly chart, we see this clear head and shoulders pattern is forming. Okay, so I like to see the harmony in the head and shoulders pattern. You can see that left shoulder is precisely, head is 127 extension of the left shoulder. So the time of the left shoulder should be relatively equal to the right shoulder. So harmony should be not only in the price action, but also in the time of the formation. In that case, the pattern is more reliable. Well, this level also confirmed by this pattern A, B, C bottom. This is 618 extension 146.51. Stands precisely at the highs of the previous shoulder, on the left shoulder. That gives us some confidence that probably this pattern could work. Now, so what we could do today? First of all, we should take a look and keep an eye on that area. If we will see sell signals, sell patterns in that area, we could try to enter on the short side of the market with the minimum target, I suppose, that area around 144.20. That could be the potential move from that head and shoulders. In this case, it will turn to the bread and butter pattern on the daily time frame. But if this head and shoulders pattern will fail, market will flirting about that area and acceleration to the upside, then it's probably better to out on the short position, because it will lead to the takeout of these highs, I suppose, because the breaking of the failing of the head and shoulders pattern usually leads to the strong opposite move, and this will be coincide with our expectation concerning this double repo pattern. For instance, this current trading session, market could show some move below it, okay, due to this head and shoulders on the hourly chart. Then if head and shoulder pattern will fail, market would accelerate to the upside, take out these highs, reach this resistance, and create the second top of the potential double repo sell. These two scenarios. That's why it's very crucial for us to enter in the market before market will reach that area. And the potential level for entering on the short side of the market is area around 146.51. So we need to drop our time frame to the lower time frames, such as 30-minute chart, 15-minute charts, to see some potential sell signals in that area to possess ourselves on the short side of the market. If market will fail there and acceleration to the upside right from here, then probably our loss will not be very much. But in general, we should enter before market will reach the neckline, because if you enter and will be possess yourself on the breakout, this will cost you a lot of nerves, and this will be very doom and gloom action around the breakout of the neckline. We do not want to see it, we do not want to feel it. We need to enter somewhere before that will happen. So you guys very often complain that I tell you watch for the lower time frames, watch for potential sell signals, watch for some confirmations. How we could do that? Today I decided to show you the lower time frames and particularly 50-minute chart. So what particular interesting we have there and what to watch for. This is our move from the head, and this is the beginning of the right shoulder. What do we see here? First of all, we see what this small blue line, dash line. This is the 618 extension from this larger ABC. I just want to show you on the hourly chart. This ABC, A, B, C. This one 618, 146.51. That it is. Now let's take a look at recent swing on the 50-minute chart. A, B, C bottom. Market accelerates from 618 right to the 100% extension. Now turns to some retracement, and also it breaks out this 46.13 area 3-8 resistance from the head, top of the head, to the neckline. There's no more the fib resistance. Now let's take a look. The effect of acceleration from the 618 to 100% extension tells us that market probably will reach 1618 target. That stands around 146.49. It's very close to the 618 extension from the greater ABC that we just discussed on the hourly chart. Also take a look that this is 618 resistance from the top of the head to the neckline, 146.44. So this is area of agreement, and that is sufficient area of resistance if market really intends to create the head and shoulders and really intends to accelerate to the downside. If market will break that area and accelerate further to the upside, this will tell us that probably this head and shoulders will fail. So that's what we should watch for on the lower time frames. Okay, so when the market will reach that area, watch for some reversal patterns. That could be smaller head and shoulders. Maybe this could be some kind of butterfly sale pattern, or something bearish engulfings, double tops, or something in that area that could tell you that probably we could enter on the short side of the market. You can place stop somewhere above that area, not necessarily above the head, because it will be a bit far stop. You could place even stop, I suppose, somewhere around 46.80, just 40-50 pips above that area. That will be sufficient, because market should not break this area if it really intends to accelerate to the downside. So that's current view on the market, and that's an area that I think we should watch for and keep an eye during the trading session. Watch for sell signals in that area, because we need to open our short position before market will reach the neckline. When the market will accelerate, if market will accelerate from that area to the downside, we should move our stop to the break even when it reaches somewhere the middle of the left shoulder, because we do not want to lose our money when the market suddenly will fail around neckline and accelerates to the upside. That's our strategy for today's trading session, and good luck to you. We just discussed what to watch for and how to act in different situations.